Can you hear me? Okay. Good morning, everyone from the United Kingdom. My name is Wooten. You can call me Rainy. I am from Newcastle University, and I would be the host of the webinar for today's section. And actually, today is the webinar number 9 of the Financial Banking Network of the AVSE Global. And for today's section, we will cover very, very trendy and interesting topic, which is the financial technology, or we call like the Fintech applications. Hello everyone, can you please mute your microphone? Thank you. And let me start continue my conversation. Yeah, and actually, I hope that everyone will mute your microphones. And if you have any question, please just like put on the chat box, and then our team will check, your question, and I will be read it out and ask the speaker for your question. Thank you very much. Okay, let me start it again because some disruption for my starting. Actually, I'm from Newcastle University, and I will be the host of the webinar. This is the final webinar of the FBNet in 2022, and therefore we have invited Dr. Tuan Ho from Bristol University, and he is the very, very excellent researcher and also the practitioner in this field, financial technology. And I'm sure that this is a very trendy, interesting topic for everyone, and therefore it attracts a lot of people for today's section. And now we have nearly 100 people attending the section, and I'm sure that speaker will have pressure because a lot of people may ask many questions. And actually for today's section, we will very proudly to have Dr. Tuan Ho from Bristol University to be our keynote speaker. And let me, have a very quick summary and introduction of our speaker for today. And Dr. Tuan Ho, he Vietnamese, yes, but he is teaching in the UK, and actually he is senior lecturer and director of the master program in accounting and finance at the Bristol University and in the United Kingdom. And I think that Tuan Ho is also the visiting fellow in Singapore at the moment. And also, I think that he have a very long profile, and I'm not going to cover all of them. I just try to summarize about what he did and what his achievement. Basically, I have to prepare one paper, very long paper actually, but let me summarize it. Dr. Tuan Ho is not only a very successful scholar with a very high number of publications in different journals, for example, Journal of Business, Finance and Accounting and others. And also, the more importantly, he is an excellent practitioner with a very extensive experience and success in the investment and policy consultations. And recently, Dr. Tuan Ho have many talk, in different webinars and in different television series and other things. And also for today's section, Dr. Tuan Ho talk will give us a great insight into the practice of the fintech. And throughout the webinar for today, we can expect from our speaker, to earn some very useful research and practical knowledge as well as the experience related to at least 3 areas. The first one is what drives the fintech adoption. And the second part of the section would be the financial technology research. So Dr. Tuan Ho will cover some of the research in this field, especially the recent one and most useful one. And also he will cover some practitioner and practical application of the fintech based on his personal journey. I really like this point because Dr. Tuan Ho have experience on his own outside there. And therefore, I believe that his experience would be very rich, and we can learn something from him. And maybe we can apply that, for our future career and also the investment and other things. And final section of today's section would be regarding the financial technology and the regulation. I think that the regulation would be one of the most important things because even the fintech is important, but the regulation would be the thing that control for financial technology. And it's good, to go through and review some regulation from this field. And if you have any question, everyone, can I ask please everyone to, post your question in the chat box? because we have many people. So it's really hard for everyone to speak up. And therefore, after the presentation ended, I will pick up the question from the chat box and will ask the speaker on your behalf. Is that all right? And also, can you please mute your microphone throughout the presentation, to avoid the disruption of our speaker. All right. And now let's get started. And I hope that you enjoy it. And I think that, different than the normal webinar, for today's section, when the presentation ended, you can, raise your hands and you can raise your voice, raise your question. And I will be managed, on the question with Dr. Tam Nguyen and Hai Jin. All right. Thank you very much, everyone. And Dr. Tuan Ho, this is now your turn, please.
Thank you, Vũ. That is very impressive introduction. I didn't know that I did so many things, but many things will be with failure, not really success. And actually, today I will share some of the failures to you so you can avoid the path that I have been through. So first of all, let me say thank you to Vũ and everyone that invited me to have this webinar, and that is really honored to present here today. And I didn't know that this is the final webinar for the semester, so another kind of honor for me too. Let me briefly go through the general idea of the talk today. Is when we have a talk about fintech with all of my colleagues here who is looking into fintech, we have different opinions about what fintech really is, how it should go, what is the research area, what is the application area that look promising. So when I think about a topic again, I put in the personal perspective or personal experience, because this is how I see things, and this is how I experience things in the area so far. So let me go to to the slides, and then we will see, and I can start my introduction. Right, I hope everyone can see my slide now.
Yep.
Right, so let me begin. So let us start first with the definition of the fintech before we go on anything, because for everyone, fintech means different things. So the fintech definition I take here is actually a combination of what I learned from the Financial Stability Board, the Basel Committee, and the BIS, Bank of International Settlements. So they generally have slightly different version of the definition, but then if we incorporate all of them together, that is basically fintechs mean you apply the technology, which is the innovation on the financial area. Anything about business model, application, procedure, process, products, changing of human resources, or anything that is considered fintech. So that is the broader definition of fintech you can think about. So one of the example of fintech is I learned from one of the banker is basically if you have any process that in the past that used to be recorded by different people on different computers or even on papers, and now that you transform them into one shared spreadsheet, that is already considered a fintech, because that is basically considered, if you think about it, this is somehow similar to the idea of blockchain, is everyone having the same spreadsheet and do things. So that is generally what I think is the fintech, about having an innovation that make our life better, more efficient. And then if we take that idea, and so we will have a paper by Tackle and look into the parts of the fintech area and then the reason why they develop, then we don't really have a fintech is only from now, but then we actually go back into the 19-something. So like, for example, from 1966 to 1866 to 1967, we already have the kind of like fintech development by people doing the transaction via telegraph, which is very early on. And in our age, we learn a lot of things about ATM, online banking, mobile banking. And if you are people who like in my age or earlier, you will learn about the banking in Vietnam is we are moving on a system that there is no core bank, and then you are moving a core bank. That is a huge things. Because when I remember that in the 2003, when I start my career in banking, the thing we do the most is actually transfer all the data we have on all kind of different database and put into the core bank. And this is one of the huge things in the fintech area. And now we are moving to something is we call decentralized finance, or we move on to something that we call is using the cloud technology or human or AI supported human work. This is basically, I think, where the new fintech is moving on to. And so the key area of the fintech, this does not cover everything. It's just a non-exhaustive list that could mostly is about payment, that is about credit, lending. This is about what we mostly is thinking about is crypto world or DeFi. That's basically distributed ledger technology application. And then we are moving into area of investment management services. And with all of these roles, you also have the fintech going on to financial supervision and regulatory compliance. One of the examples is using technology or AI assisted tools to find out potential frauds and violation of regulation. And so those things is where I think fintech is moving toward. Before we go into more question on how these things will move on, we need to see why the fintech application adoption right now is in the central of many people's minds about how should finance moving. One of the key things is because if we see in the area of fintech, we are trying to renovate or innovate most of the basic role of the financial system. It is more about credit, it's about payment, it is about investment, it is about insurance. So in the core system, we have everything that is possible. It is possibly will go through a change in the fintech area. And then that is a combination of having the data available, that is a combination of having the demand for some change because the cost of the financial services company is too high. And that is, I think, is one of the main reasons we will discuss a little bit later. But then that is, you can see that in this one, fintech is nothing special. You will see that they are basically attached to any area that used to be a normal traditional financial service company. And then we are trying to do something about it. Not like massively different, but then slightly different can improve a lot. Let me take one example is very straightforward is the P2P lending compared with traditional finance. So the upper part here, we will see the traditional finance, and the lower part here, we have the P2P lending. With the traditional finance, one of the key players we need to have is basically having the originator, or it could be a bank or arm of a bank or a separate person involved in that. So when you have a loan, you need to have somebody originate the loan, and then the originator, they will make a loan to the borrower, and the person who provide the money to the originator, it could be the bank, it could be some other one. If it is mortgage in the UK, for example, it's not really the bank, it is a separate mortgage lender. So you can see that the main thing is that you need to have a person like that, the originator, to play the role of the middleman. And people put money into the originator. And then the originator takes some service fee, and the rest is they lend to the borrower. They take the money to the borrower, and then they repay to the depositor or the debt holder. It could be now in Vietnam, people are very familiar with the idea of the bonds, the Tri-Field. Basically, that is the same idea. So this middle guy is important in the traditional finance. Without him, the system cannot run. But then also because we need a middleman, the middleman will charge some fees, and sometimes the fees could be very high, and that is the main problem with the system. So you have a middleman, and the payment system needs that guy, and so that guy can impose a very high cost to the system, transaction cost. And then people think, what about if I get rid of this guy? So then we come directly into the P2P lending model. So the platform play the role of the guy, but the thing is that if you look into this thing, the platform, they basically play a very pure role of the middleman. So the investor investing in the platform transfer the money to the borrower and charge them very, very low fees because they are less costly than the originator in the traditional model. And the idea is that they want to compete with the original model. The thing people will argue about the two models is the originator in the traditional finance will have some expertise by the understanding of the depositor and the understanding of borrower. So if you have a credit analyst who are likely to be able to identify better loan compared with the bad loans, then you will be able to reduce the bad loan or the non-performing loan ratio. Compared with the P2P lending, you have to trust the platform or the AI platform that do a good job. And generally, people does not believe that the AI does have the soft information that the credit analysts have. And so typically we see that P2P lending has higher interest rate, higher default rate, which is right, which is correct. The question is how efficient that kind of reducing the default rate compared with the transaction cost people can really reduce. I think that is a question of the future, because if this AI is improving with more data, can it be better? I think that is an interesting question. Let's take a look about what people in the UK right now is doing with fintech. We can see that they are still doing something very similar. We have somebody get into the banking. We have Monzo, Revolut. Revolut now is basically, I do about 20% of my trading now through Revolut, which 2 years ago I never really think about it. So basically they are taking the business from the normal broker. Monzo, I didn't use that, but then many of my students use that, so that seems to be something is going on. Probably some of you you use Marshmallow. That is a kind of like insurance technology company that I think some of my friends now doing business in the UK is using Marshmallow more than their normal insurance agents. On the payment is the only thing I use in this is basically Wise, but then I see a lot of my students using different things. Remitly is appear on my YouTube advertisement nearly every day, but then I really not using that. So the thing is, you can see that these are what we call is the fintech unicorn in the UK sectors, which I believe by now many of them are no longer considered a unicorn because there's a huge the huge drop in the valuation so far this year in the fintech area. But then I think some of the guy like Revolut and then Monzo is still very, very considered to be very interesting. And if you think about fintech in a broader sense, this is not just about the startup companies. It is actually about the companies itself. The bank itself can also re-innovate and be a part of the fintech. And if you look into these things, you can see two things. I know personally is doing some really interesting fintech projects. One of them is the Barclays. And so Barclays, they have a group of incubator. So Barclays is the bank, traditional finance itself. But then it's create an incubator that has a lot of fintech company inside there. And some of them are doing something extremely interesting. So like trying to streamlining the payment through the blockchain, or they have investment technology that is trying to improve the personal experience with the robo-advisor. Well, if you think about high-risk lend downs, they are going to do they are doing some renovating. So I have been a customer of high-risk lend downs for many years as the investor using their platform. But then beside that, they have a group of people trying to improving the set of robo-advisor or portfolio. They say portfolio customization based on the customer input into the system or into the robot advisor area, more platform about the preferences and then risk levels and other things. So all of this is showing that this is not really, if you only look into startups, you miss a big part of the fintech. And I personally believe fintech is more about the current companies changing the way they're doing, rather than only relying on the new company doing new things. So when many people talk about fintech, they focus more on the startup side. Why? When I think about fintech, I think a broader side is we have bigger financial institution trying to innovate themselves, and I think they will be the main player in the long term, because the investment they do will be much larger than the small guy, especially when the startup funding dry up like now. Then these big guys will have the chance to take over some of the startup, or they basically they don't really take over, they just take the technology and then let the startup die. So if you look into the right hand side, those are the key player of the fintech area. But then we have the part which is down to the diagonal. That is basically the supporter of the growth, and I think this is neglected in what the fintech discussion is. So these guys are not directly involved in the fintech activities, but then these guys either support, advise, or a part of the one who really tell people what fintech is about. For example, university, I think we play a very important role of telling people, so basically what is fintech and how should people engage in fintech. And we also advise people, advise regulator how to do things with fintech. So basically we have here on the diagonal side, we have the university here. So for example, University of Bristol, they have themselves a kind of like a startup hubs near the university where the student and staff can interact with the startup people. But then on the other hand, they also have a fintech program. They have people research about fintech. People will advise regulator about what they think about the way to regulate fintechs. And then we also have the big four company in accounting. They also do consulting work, and that is also about consulting people about applying fintech. For example, I know that people in PwC, they advise some of their customer about using of some of the services by Lloyds or by Barclays or by directly from Oracle about improving the payment services or the payment stream they have. And that is, I consider to be contribution greatly into fintech. Because without them, the business, they will not know that Deloitte or Oracle have something that will support the better payment. So Oracle, they have some products, Barclays, they have some products, but then they cannot access to the customer because the customer is not aware of that. So basically, PwC will introduce the customer about those products. So that is a part of the consulting and other things that I think is very important. That is also neglected in the studies of many, especially accounting finance study, ignore that. Right, so that is my introduction about the system or the ecosystem. I think is need to be broader idea about that. And the next thing is I will talk a little bit about what drives the current fintech trends. I think the first thing is there's always a demand for improvement in the financial technology. Not now, but then long before. Main reason, if you look into the cost, Philip Ponti estimate is around 2% for the US. And then Basel, he already estimated that many years ago that's also 2%. So if you look into this, if you think about any intermediation in some other business, 2% is basically their profit margin. So the cost of the financial intermediation is somehow equal to the profit margin of the whole other industry. And this is from a perspective of economics, that is unacceptably high. And if we look into that, that surprisingly never changed that much. So the raw unit cost is just around 2% from 1900 until 2020. This is very difficult for many people to understand because you have a lot of technologies going on, the cost is still 2%. So nobody trying to do something better, trying to reduce the cost and then make the whole system more competitive. And if you look at that, this is not just one single country, that is a lot of countries that is have similar. We have a cases in France that you will be able to track that down toward the same cost with every other nation. But then after that, you will still that they will be sticky around that. They really never change. And this is, I think, one of the key things is fintech will always a demand, because until people can track the cost down, there is a demand for it anyway. So if we look into the idea, asset management has still be very expensive. We still see people charging the funds fees of about 2-3%. This is impossible to think about it, but then this is still there these days, even if we have ETF of 0.2% or even 0.1%. And we still have funds charging people a lot of money, and people are still paying for that. If we think about asset management, that is the way. And if we think about the banking system, we still pay a lot of fees that we should not actually pay, because in the past, there are some reasons for using some credit card fees. Nowadays, what is the reason for this? I don't really see it, but then people still charge it. And also, we have a lot of fintechs going on. We still see people introduce new credit cards with some fees. And that is an evidence to me is that the current fintech will not wash away that much cost available. Another thing is, I think very important is human will reduce conflict of interest. This is my strong belief, because we are human, we will have conflict of interest and we will have biases because of many reasons, career reason, for personal biases and many things. Some of the economic incentive behind it is clear. For example, advisory fees, advisor will advise you to do investment. And typically, if you ever go to advisor or if you use some traditional platform, you will see that they tend to encourage you to invest some of their funds or their favorite funds. They call them favorite funds. And you look into them, some of the funds have really high fees compared with some competitive funds that you can search for on Morningstar. So the question is, how do you force these kind of traditional platform to not doing that anymore? That means they need to introduce you to a wide range of funds, not just introduce you to some friends who will pay them more funds, more fund fees. And also you have advisor who will introduce you to some products. They always say that, well, basically, I don't really, it's just their advice. They have no, there's no financial advice. They have no, they are not pushing you to buy something. You make decision by yourself. But then the key thing is the advisor, they will introduce you to something that is sometimes is more expensive than the other part on the market. And so what is the point of using these things? And we also have similar situation right now in Vietnam. We already see that somebody get into the bank and then they get introduced to some bonds that they don't really need, and then they actually buy the bonds, and now the bonds cannot really pay the or in the has a high default risk, and then there's no chance of the investor can there's a little chance these investors can get back the money from some of the companies that issue the bonds. So there's basically conflict of interest everywhere, including mortgage, bonds issuance, funds, mutual fund choice, and many others. Even the platform that you think that they are unbiased, there's basically just platform. You click on, you choose things, but then actually the products available to you is already a bias. So basically, human advising or the platform mostly controlled by human is biased by itself, and they have conflict of interest. So robot advisor and human advisor is hopefully will be a solution that reduce this one. I don't say that will completely resolve this one, because as I say, if you have a pool of products that is biased by itself, then whether you are advised by a computer or not, it will be biased anyway. But then for the competition between different robot advisor, people will need to have a broad range of products, and basically that will try to reduce the conflict of interest and hopefully reduce the cost of tradings and investment. Actually, for myself, I hope that this area is actually the area will have a lot of improvement compared with the payment and other things. I can see P2P lending and then payment. They have certain problems that we still need people, or the cost cannot go too low. The main thing is because default risk is there, because counterparty risk is there. Then if you want to reduce the cost of payment and the cost of loans too much or lending too much, then basically you will have higher default risk, or you have some operational risk that will not be covered by your small fees. But then investment, there's no reason that people should be charged high fees, and there's no reason that people should choose high fees products. So I think investment management, personally, I think this will be an area that I think will have a lot of improvement in the next few years. The final thing, actually, I think the most important thing is we have COVID. And the COVID forced people to use technology. And when we have technology adoption, then we will have fintech adoption. That is a natural flow to me. And this chart shows very clearly, if we don't have the COVID-19, the adoption does not increase to, if we look into this part, from July 2020, we have sudden structural breakup in the number of people downloading some apps. And this also happened in April when we have the first wave in the United States. So, well, basically we have the things that is helping us. And now that wave is kind of warning, but then people will start using things more. And then we hope that fintech will become more important in the future. So before I move on to research and application, do we have any question that you think that I should address?
Yes, I think we have 2 questions so far, and let me read it down. The first question from Dang Yu. When will the government apply the central banking system? And when will the digital payment be popular in Vietnam like it's in China? That's the first question.
Mm-hmm. When will the government do that? I don't know. The government will have to decide it. But then I think eventually Vietnam will catch up with China very quickly. One other thing is because if people get to China, get to Thailand, we see a lot of digital payment already. And in Vietnam, we also have a lot of the companies who see these things and then adapt into the system. I think the key problem I understand from this is there's no guidance from the central bank about digital payment on many perspectives. So for a big corporate to engage in digital payment, they need to go through a kind of like we still need a middleman playing there, and then that is likely to be either the bank or very highly qualified financial services company. Or like if we think about Momo, they are asking for the digital banking license, and if that happens, then those with the digital banking license may play a different role in this. And then central bank, they are thinking about trying to get the digital. They already have some circular on digital payment. From the perspective of practitioner, I learned from it, there's nothing helping them in trying to do this thing, and then they are still operate in the gray area. So what they need now is more specific guidance, and for the big player to involve in this area. And from now, what I can see is those who can get the digital banking license is likely to be our hope that will speed up. But then even without them, you will have plenty of things like Apple Pay is there, other payment is there. And if we don't do, there's a chance that the Chinese payment system can get into our system. through a small player, and then that is my answer. So it will naturally flow into either from central bank perspective, or will be pushed up by the practice of the small players, and then eventually the central bank has to do something about it. And that's my guess about that. So I'm positive about the application of digital payment in Vietnam.
Yeah, thank you for that. And the second question is, what do you think about wealth tech in Vietnam? Will it enable low classes to have a safer and better investment option, aside from something I cannot read that word?
So like that. That is interesting. The work is basically a very traditional finance, and I think it will still be there for many people. They are not really technology user, but then for the new user, the young guys, I see a lot of adoption by the new Fintech things or any others that will obviously have some impact on that. But then that will definitely have impact on the wealth tech in the future. I'm working with one stock broker company at the moment, and they already have a view about trying to do better thing with wealth tech. The major things with wealth tech is, I think, again, regulation. Because if you want to do something, the fun thing is, if you want to do something with crypto, that is very quickly people can get it done, in about 2 months, 3 months, and then they can put a product up. For the people who do in the traditional way, and they want to provide the services to people through the stockbroking companies or some other financial services, they go through a huge lot of applications for the services to be approved. And so, and they have to tailor the product. The idea, very straightforward idea, is like you have a platform, you can provide things. But then when you get into the legal services, the legal side, you see that you can't really provide a platform because you don't have the certificate for that or the license for that. You have to transfer that in kind of some like group chat, and then you will be able to provide a product for that. And so the product is depreciated in something totally different from the first version. And that is, I think, the major problem with the wealth tech is we need to have a sandbox for this. Currently, what we are doing is we are doing traditional way of applying for license or the approval of doing new products, which is not appropriate for the fintech, because we are trying to do something that we don't even know exactly what is the outcome. So if you have a very strict regulation, these things will go very slowly. Basically, that is the idea. Or the guy who are going too quickly may face some problems in the future. So that is how I see things. So wealth tech is definitely, there's a lot of movement out there, but then I can see that people are trying to play with the gray area again.
Yeah, I think there are a lot of questions after this one, but I think maybe you can, continue with your presentation, and we can come back with a question later on.
Yeah, thank you. So I will move on with my view about fintech application. So this is my personal view or experience with the fintech. First thing is very simple. If you think about, if you ever trade about cryptocurrency, this is something one of my friends is doing, and then I'm advising them on something. This is basically a bot trading platform and doing the bot trade for the cryptocurrency. They are not trying to beat the market. So basically, I'm based on my experience of working with some guys in Australia in the funds. This is very difficult to build an AI that consistently beat the market. But then you can build some AI that adaptively beat the market. It means that in some area you will see, or sometime you will see certain pattern or certain strategy will perform well, and then you take advantage of that. And the computer will be able to identify that quicker than you. And then you can recognize that based on a lot of running and data mining. You will be able to identify some strategy will work in some time, and you do it in a certain time. But then it's still very costly. But I can think that they can take the technology, reduce the expectation, and then improve the quality of the services to the customer. So instead of promising that customer should try to beat that my tools will beat the market, it's just like helping the customer that, well, basically the investor will look into this, and there will be some suggestion about, well, when should be the downtrend, when should be the uptrend. And then they also have back testing, and then they have other things that you can look into, and you will apply that when you feel that the market is on a certain trend. So basically it is, you still, a person, the human part is still play a large role on that. And you are unlikely to beat the market by relying on the bot, but then you will be able to strengthen or doing your trade in an easier way, make your life much better, is trying to automate your trade and also automate the analysis. So instead that you have to spend 3 or 4 hours looking at all of the charts and everything, the bot will be able to do everything for you. And so you only need to spend about 20-30 minutes a day looking into the chart and decide what kind of trade you want to engage in, and then let the bot automate that trade. For example, if you can identify the uptrend, so basically the bot will be able to identify the, you can see that they have up and up over here. That's basically, let's say you should buy at those points. So if you identify the trend, you can just execute that by choosing, they have different trading strategy. So each of the trading strategy is tailored to certain trend that you specify. So if you master this strategy, you basically say, if it's uptrend, and know that, for example, Gunma 3 will be the strategy to follow, and click on that and let the trade happen. And then there is spread across different trades, and then you will be able, on average, Gunma 3 will do well in certain period. And so this is a kind of platform will help people to make decision and do a quick trade and so many other things. And second thing is, many people now pay a lot of money to join some groups, and this group will give you the signal up and down, because these people don't know how to read charts, or they don't have the time, they just want to follow people. And this is a low cost alternative, because this one will be free for everyone to use. The difference is they will take the fees from the platform, and then so basically this is free for you, and then they make money from the platform. And so this is a free of charge or very low fees. If you take the trade through the system here, you will pay a little bit higher fee than the other place. But then generally, if you don't trade, you don't lose money. So this basically, this is an alternative, and I see that is one of the reasons I think that is considered to be a robo-advisor of the trading, and give you a better choice than joining some group that give you the information. The other thing is, actually I use myself is there's a tool on what is they call the AI Sense. So that will be able to read through different filings, different documents, and identify the level of optimistic and pessimistic. The more important thing is they can also do the comparison. I think if you have a red one here, or very big red, that is very negative. One very big green, this is very positive. And the major thing I think from the platform is basically this part. I'm not really very fond of identify only the positive and negative in one transcript of earnings call. But then if you can compare the score across different transcripts, and more importantly, if you can somehow group them together, for example, if I can group Starbucks with some of the competitors, I can see the score. So if Starbucks is way more, for example, positive than the other competitors, so within the group, I can identify Starbucks seems to be expecting a better growth in the future. And similarly, if you group AMD with other chip making company, you can see basically they are not very positive. And so if other company is more positive, or if you see everyone is lower, less positive, you can identify the industry trend, and that's really helpful. Another thing is, I think very interesting recently is about inflation. So how many companies are talking about inflation? that may actually have a lot of information for us about whether inflation may influence these companies, or whether these companies are likely to have ways to protect for for inflation. And if we think about the literature on inflation uncertainty at the moment, and so if we look into that and then buy into this, and then combine with this idea of having inflation, looking in each economy, see how they talk about inflation, you can see how they affect basically the company's communication with other people, with the investor about the inflation. And also on the side of, I'm thinking about these things actually contain some information about whether that is affecting the future earnings and cash flow of the company as well. So that is one thing that is we can think about, and especially again, this thing will not be very informative if we look into a single company, but then if we can group them together. For example, all of the banks, they seem to talk. Some banks suddenly talk a lot about inflation compare with other banks, so that may signal something about the bank, and I think that is the main thing we can look into. Another thing is, this one is not too much about the research of empirical people, but then it could be the research for people who are really doing about management research about how companies react to AI. So far we have seen that people use AI to improve the product making decision, but then on the other hand, we can also have a situation that companies use AI products to tailor their disclosure or tailor their discussion into something that is basically, so I can consider that is using AI to counter AI. So if I use AI to read the transcript, or if I use AI to read the annual reports, so the expert who are corporate investor relation also use AI to identify which area people will look into and what kind of language should I use. And so they use that to anticipate your question and trying to do some work on that. So basically, AlphaSense is one of the tools they can have. So this one saying that, well, basically AlphaSense will be able to help you. If you have this tool, then you will be able to anticipate what kind of question that people will pose to you. Because in many of the others companies, when they already have the filings and the transcript before you in the same industry, these are the questions. So these questions likely to be asked to you as well. And so you need to be prepared to answer these questions. And your language, what kind of language should you use? So these are the tools I consider to use AI to counter AI. Let's see, so those are the idea I have so far, or I recognize so far about the experience I have and how that can transfer into a research that you might be interested in. One of the very basic idea is, if I have something that is written or done by AI, and I have something is done by human, which one is better? Or even the AI cannot be better. Can it in some perspective provide some less bias, more efficiency? And this is one of the research that is published recently on the Accounting Review, but actually that has been around since 2020, based on my understanding. So they're looking into reports that is largely written by AI, and they're looking at a report largely written by human, Analyst report, and they're looking to a recommendation by wholesale. So they see whether there are biases, there are better recommendation. And the simple idea of this is they want to see generally, would the biases that documented in the equity analyst research reduce if it is written by a robot? Would the robot add any recommendation value? For example, revise the forecast more frequently, give more information. The data is a big problem in this kind of research because that will require you to do a lot of data matching. And this one is, they are basically stuck with the ISEAS data, which has the original traditional analyst studies do. And then they are basically doing the Thomson One search for randomly 1,500 company on that. They use some information they have to identify about 7 companies that is mainly right to report by robots, and then they try to compare that. There's some problem with that approach, I think, because some other companies might actually use AI, but they don't know. And aside from that limitation, the idea is very easy to action on if you have the data. I say the data is the key thing in this kind of research. So you can basically the normal regression model will not have robot analysis. They just have recommendation regress on a bunch of things in the literature, very simple, basic things. What this paper do to get on the top publication is they have the robot analyst over here. That's it. This is a kind of regression that is people has been done from 1992 or so. They have seen, and then from a regression that you do on 1992 and still get published on the top journal, is that because you have the data on robot analyst. That is the case. And then they find that basically the robot analyst they are less biased. They revise the recommendation frequently, obviously, because they are robots. So literally every day you can generate a new report. So obviously they update the information more frequent. They are less biased in terms of they are not really issue only by recommendation. They issue a lot more self-recommendation as well. The thing is that the paper doesn't, from the first version of the paper, actually they put in some evidence of the performance. So I have looked into that into 2020, and basically the robot analyst, they underperform the human. Oh, that's the good thing, humans still outperform. But then in the final version, you don't really see that anymore. They are basically take that out, and then they only look into the biases, distribution, and then reaction to the recommendation. They do find that the market still react quickly to this kind of report, which is expected.
Yeah.
So, but then I think that is the main thing we would like to take from this is even though the robot analyst does not outperform or slightly underperform, they are less biased. And they are obviously less costly, because if we think about we pay 100,000 without a bonus for the analyst compared with a robot. The robot is doing a job that is not too bad. And so that is somehow an implication for the industry. And that is the whole thing I say about the applications. Vũ, do you want me to continue, or do you want me to stop and answer some questions?
Yeah, I think maybe you can finish first, and then we come up with a lot of questions out there. All right.
So let me go through quickly on the idea of regulations I have. So if we think about, so I have so far talked about the applications, but then in this area, I think which is very important is also regulation perspective, because we have a bunch of new things happening. How the regulator should react to that is a question. So people, if I take this from the Bank of England website, it means that regulator has a specific interest in this area. They want to know, so what kind of machine learning or AI technology that is adopted by UK financial services. And we can see that most of them will be in doing insurance. And then again, as I expect that investment and capital markets. So I see a huge potential of this one to be disrupted compared with basically non-bank lending or payments. AI is not very much better in that way, I believe, for myself, even especially for countries like China or Vietnam. We have a lot of soft information that cannot be fit into the models. So I don't see that AI will be able to improve a lot on that side. If you can think about technology, yeah, platform could be better. But then if you think about AI, I think this is the two areas, insurance and investment. Main reason, these areas, they have somehow a very standardized products. You have standardized ways that the market operate. And so when you have standardization, you will have the application of machine learning much easier than non-standardization. And that is the key thing I learned from doing machine learning. So, and so if you think about that, then insurance is an area that people neglect a lot because people don't understand about insurance a lot, but then actually that is where the AI in fintech is happen a lot here. Now we have companies doing advising people about contracts, and also they have a lot of areas of precision insurance that is now automated fully. And those things is very important, but then we don't really know what is going on beside that. And if we learn about this, and then we will move on and we will see what is the challenges or what is the problem that the companies they see with the fintech. What I can see, obviously we can see that data and model is the two top concern. Data could be biased, and people can take advantage of the data if you have a platform that share on the cloud. Model is the second thing. We all know from the AI is if we modify the model implementation or specification, we have different result, very different. So for example, if I'm doing some work with the analyst, read the operating report of analyst, if I change the parameters I want, I have completely different classification of analyst report as kind of positive or negative. They're completely different. So it is like you have a models, and the models decide your output. And so if you have a bad model, you have a bad output, and that is a problem. But I think which is more important for a researcher is this area. Because this one is, I think, more or less, a lot of people are competing on that, and then this is somehow dry up at the moment. But if we think about the area that is, I don't think a lot of research is going on, or I don't see a lot of get published highly is. So I think there's a lot of possibility here. Is we have about reputation risk, regulatory uncertainty, how that affect the fintech adoption, how that affect the outcome of fintech. And another thing is we learn about machine learning ethics. That is basically very recently I start paying attention to this. This has been around for a while. I never really take this seriously before because I think, well, I just do this thing and then let you guys decide about what kind of ethics you want and I apply it. But then recently I have learned quite a few things about people are trying to modify the machine learning models to benefit certain way of trading, and then there are certain way that people modify the machine learning to attract the investor to invest in the wrong way on some platform, and certainly. So that become an area that people will need to pay attention to. And then we have Journal of Business Ethics that would be very interested in this kind of thing. If we can find any idea of working on this thing is very interesting, I think. Right. Right, and let me say a little bit more about the other risks in some other countries. So we can see that regulation is also a problem. So Cambridge, they do a survey of companies asking them what is the risk they see toward applying fintech into the digital payment, which is one of the large area of application of fintech. And then mostly they will point out that regulatory change and cyber attack is the two key things. And so the question about regulation adoption is, I think, is the most important thing, I think, in my perspective about fintech, because we can see in the cryptocurrency, if there's any regulation, and I have seen some paper recently, they already look into that. So what they have is very simple. They take the accounting literature, they have, or even in JFE, there's also a paper by that. So you have a series of regulation change related to the area, and you see the market reaction to that. You will see different kind of institutional factor that affect. So what they do is very simple: market reaction, regulation change. They collect the information around regulation, and then they look into that and see how that affect the market. And in the crypto market, that affect hugely. And I think the paper is published in European Accounting Review. That is one of the, I think, great idea, simple idea applying to and also very relevant to the real world situation is if you have regulatory change, you will affect the fintech area hugely. And taking crypto is one example, but then you will have a bunch of more things that is affected as well. And if you look into something to do in the more exotic country for publication, it could well be into Asian. ASEAN country is one of the setting I think very interesting in the way that they are just adopting things. Why their current traditional finance still have still developed. There's not yet developed yet. They're still developing things, and then now they're dealing with the new things coming in. So they have a developing system, coping with a new emerging technology. How they cope with that, I think is also interesting to look into. Because if you look into digital lending and digital payment, that will take out a significant amount of payment or revenue from other countries. And so if that happened in Vietnam, for example, some of you asked about what if digital payment become very popular in Vietnam. So that question already addressed this one, because basically if you think when that become popular, how much money will be drained out of the normal traditional payment system and get into the digital new players? So we have a question very similar to we have the question with traditional taxi, and then we have Uber and Grab question here, and we have very similar situation here. What if the digital lender and digital payment, they become very popular and they take a bit of money out of the banks? So how will these things find together, and what is the regulator role here? I think the regulation will really in demand for some research or expert opinion by the time. And we need to think ahead of the time by thinking ahead of this and then how these things should be addressed. In terms of technology-wise, I think a lot of people pay a lot of attention to blockchain. Why personally, I don't see that blockchain will outperform machine learning in this area in 5 years to come. So basically, I still think that machine learning or predictive analytics in general would be the key thing that drive the growth of the fintech in many years. And that's actually work well for people who are doing research, because we are doing modeling, we are doing forecasting, and how we improve the process, how we apply the machine learning is the key thing. One example here in the UK is we have a very big company, actually BT, come to Bristol and ask, so what kind of research in fintech you guys are doing, and can we actually apply that into the system we have? So far, there's nothing new out from that, because BT just having the movement, the digitalization in BT, and they have a small amount of data. That's for us is a disadvantage, because we are researcher. We use a very large amount of data to generate something. And if BT they want to use their new system with limited amount of data, we don't really have anything that we can offer them. But then this is one example that basically companies is after they digitalize, they will have data, and they want to use data to improve the quality of the forecast of their revenue, sales, and many things. Then we will have the ability to help them.
Can you please mute it? Yeah. Hello, Yang. Can you please mute it, your microphone?
Yep, thank you. And now I think the next thing is when we talk about fintech, there's also another factor that we need to talk about is infrastructure, human resources, and innovations of regulatory. And those things are key things that is the Cambridge already identified as the major thing. And if we are doing research on that, or we are thinking about what is the key area we should pay attention to, I think this is a key thing. And finally, one of the example, what kind of research can be done is just do a comparative study and see, well, basically we have countries in certain area which share very similar culture and similar development process, and see how they address to the same problem of fintech in different countries. From the perspective of people who are doing regulation or policy, I think they have a huge demand for this. So they want to know which other country is doing, what other countries is doing. And surprisingly, you would recognize that they don't really know a lot about this from about other countries' applications, how they do things. And if somebody can do a good survey on this, that is absolutely brilliant for the regulators in different countries. I know that Vietnam has a huge demand for this. And finally, what kind of research can be done is very simple, is you look into the way of collecting some data. This is one simple exercise I'm doing is I'm collecting the data of the banks and say, well, if you have a fintech competing on certain area, does the bank get is the bank get affected? So this area is not new in some of the literature in the Western countries has been done. And if you look into Vietnam, then consistently you will find that fintech will decrease nearly everything. NIM, ROE, RA, and yield of asset and everything. So basically it means that when the fintech get in, they take the customer away and they force the bank, well, in some way they force the bank or the whole system to be more efficient. But then on the other hand, if they keep doing that, they will come to a very similar situation of you have traditional taxi and you have Uber and Grab. Uber and Grab take a part of the profitability out of you. What you will do, you will lobby against them, and that will become a complicated situation. And I think that is all the thing I want to talk today. These are the reading. If you are interested, then there's a lot of recent things that is happening, and then you can see that some good journal like Journal of Financial Intermediation, they are interested in having some paper that is just descriptive, telling people what is going on. And you also have top journal looking into the study on fintech with a very simple setting like people did in 1992, but then just adding some more thing in the fintech. The only problem is you need to invest in the data. So for example, the Coleman paper, I see more paper like this now. You will see these new paper getting to even RFS. So you basically have the new data. You use a very simple regression that you have in the past, and then you are just adding a new thing. The main thing is, first of all, when you collect the new data, there's no guarantee you find anything. But then even you don't find anything, I consider that still be innovative in some of the case of the research. And I think that this area is interesting, but the very fundamental question is, if you have a computer and then you have a human who is doing better, or if you think about the new way of doing trading, copy trading, does that really reduce the risk or does that really increase the risk? Very simple question, but then I think interesting to look at.
Yeah, thank you very much, Dr. Tuan Ho, because your presentation is very impressive with the very informative slide, I believe. And I hope that, all attendees today have learned a lot from you. So now I think that, we can start the discussion by using the question from the chat box first. And after we address all the questions from the chat box, and if anyone wants to raise, your voice or raise your question, you can raise your hand. And then I will pick up, some of you, and we can talk directly with Dr. Tuan Ho. Is that all right? The first question is, what are the new occupations created in this sector in the UK? What are their scopes, missions, and tasks in business and financial institutions?
Yeah, thank you. The first reaction is data analytics. There's a huge demand of that. If you think about the main things I can see, the main skill that I can see is people have a huge demand for machine learning. So, well, basically, if you are applying for a PhD in Bristol right now, and if you are putting that I can do machine learning, almost every one of us will say, well, we want that PhD student. So that's basically the skill that everyone is looking at. So if you can do data analytics, if you can do a machine learning, you are much better off in the job opportunities. So I have just lost one of my research assistant because he already get a job in his second year now at the technology companies already. So he's only in his second year, but then he's on offer a full-time job already, and then he's now kind of thinking about delaying his study to get into the job already. So that is an example. Is if you have the machine learning, the skill to do machine learning, you basically can do mostly everything. So that is a kind of the first thing. The second thing I think in the future is actually what we in Bristol try to train a group is people who will be able to communicate between the technology people, technical people, and the normal people. Because eventually when university are trying to train for people who do machine learning, or retrain people who can do machine learning, most of the statistics, mathematics people can do it. So eventually we will have enough of those people. But then now when you have a lot of fintech new products, we need people who will be able to communicate the new products to the lay person who does not really understand well about fintech. For example, you need a person to, for example, tell my parents what the new product is doing, how that is better than the normal products. Or somebody who can communicate to the regulators about, well, this is a fintech company, what is the risk and what should we do about that? So regulator needs those people, own kind of fintech or non-fintech companies will need the people. And those people are we are building for our master in fintech program is we take people through a traditional route of training in finance and accounting, but then we are trying to push people into understanding about the fintech area better so that we can actually they can do better things. So basically that is saying that we need people with the skill or understanding about fintech. They don't need to be technical, but then they have to understand the process and the core principle behind so that they can communicate with the lay person what fintech is really and how that is kind of helping people. So those are the two kind of career I see will have a huge demand in the future.
Yeah. Just a follow-up question, and do you think that the people, they need the qualifications, professional qualification or any certificate, to work in the fintech industry? Or, they just like don't have anything, but they just join it and then they can get the job there?
I can say about that in the perspective of people who get job in fintech or some other tech, general machine learning. You don't need to have a qualification. For example, the research assistant, he does not even graduate yet, so he has no formal graduate certificate yet. But then the key thing is he has done about 10 projects using machine learning throughout the uni, and then like 2 is with us, but then another 8 with other part in the uni. And he can show people that these are the things I have done. He can put that on GitHub and then everyone can see it. And so people will hire him because he has experience in doing these things. So at the moment, there's a huge demand for these people, and they don't really need a certificate, but they need to show people, I have done some projects, and here's what I have done. And the evidence is very clear. You can put that on GitHub. You can do it somehow in the interview. People will know that you can do the work, then you can do it. In the long term, I think when you start to get more and more of these people will require somebody who has graduated from great places who can really do something better. And so I would say some of the competitor of Bristol is already doing very good. So for example, ISEAS in Imperial College, they have a very, very impressive fintech program that's really selective, but then these people, they are super good. And so obviously in the future, when you have a bigger pool of people with the technology skills, then you will require for some certificate, and then they will look for some good school with that. So in the future there will be, but then at the moment, if you have the skills in machine learning, I think you are in demand in everywhere. That's I understand.
Yeah. Anton, can you please stop sharing the screen so we can see it's all is easier? Yeah. I think it's now the time that everyone can the open forum. Actually, we think that if we just attend the seminar, the webinar, and then we just keep silent, maybe we cannot learn something new or discuss something interesting. And therefore, for the webinar hosted by the FBNet, we expected and we hope that everyone would join discussion so we can find something more interesting, isn't it? And the next question would be from our audience. Whether fintechs are required to be approved by central bank in other countries?
Well, I think in not necessarily central bank. In the UK, it is likely to be a FCA decision. In the US, they will be, well, many of them will be under SEC. Some of them will be under some supervisory board of the Fed. In the future, there might actually be a prudential some prudential regulation entities on that. So it's not necessarily only central banks, but then some of the other parts. In the case of Vietnam, for example, many of the new products that is applied by the stockbroker companies is actually through the Ministry of Finance, not really through the central bank. Because if you say about fintech, it could be say like I said before, investment management, not just banking. But then there will be regulation. So central bank or not central bank, there must be a regulation. It's just like how do you do the regulation? Currently, we are doing the very normal traditional way of regulation is you make an application. You need to have certain license to be able to make that application. Well, if you are not a stockbroker company, there's no chance that you get some application through into the new products. And so that is very limited. That's a very huge limitation of that. And if we can do something like Sandbox is creating a kind of like bodies, just like Singapore and Malaysia, they are creating. So basically, we have a new group of people understanding about the technology, and then we will make an approve on certain kind of new services. That would be much easier than going through a traditional people. Obviously, it requires what we call is adopting a sandbox approach, and so far, I haven't seen that in Vietnam or somewhere. Yeah.
So yeah, I think because the question is from our audience called Ashok. Yeah, so he raised his hand. So probably we can hear something from him. Hello.
Yeah,
hello,
hi.
Yes.
Hi, good afternoon. Good afternoon. Ashok from Mumbai, India.
Hello.
So first of all, thank you, Professor, and thank you, everyone. This is very informative session. And in fact, we are working on a fintech here. Why I asked this question about whether fintechs are required to be registered with the central bank. In India, there's a central bank called Reserve Bank of India. So when there are two types of fintechs here, a fintech which does the lending, and lending happens through the books of fintech, then the fintech has to seek registration from Reserve Bank of India. That is called non-banking finance license. But there are a few fintechs wherein lending is not happening through the books of accounts of the fintech. In that case, there is no license requirement. So that's why I was trying to clarify whether in UK, this sort of information or sanctions are required for fintech to be operative in that part of the world. Sorry, my video is not working somehow. So thank you. And one more request that Professor, if you allow, we would like to link you, connect you on the LinkedIn. So we'll be sending you a LinkedIn request and few of the other participants. Thank you, and thank you, Professor.
Thank you.
Thank you. First of all, I'm very happy to connect it through LinkedIn. To answer some of your question, I understand some of this issue here in the UK at the moment. They have to get a kind of like what we have is a digital bank like Starling Bank, or we have Monzo. They have to get the bank the bank certificate, or we call this is a license. So we need to get a bank license for lending at a certain level. So it means that if you have asset under portfolio is lower than a certain level, there's no requirement at all. So you can start with a very small lending platform. There's no requirement for having a bank certificate. The thing is, when you reach your portfolio up into a certain level, I can't remember exactly the threshold, then you have to get a certificate. So it means that you can launch any kind of products that is initiative and things like that. Nobody will touch you. You just need to register with FCA. FCA normally will just provide you with a license. But then when you reach big, then you will need to have a license. And how big is a question. I don't know what is the optimal level of considering that. So that is my understanding about the UK situation.
Thank you, Professor.
I think Vũ, you are muted.
Oh, sorry. Yeah, I have a lot. Yeah, actually, thank you very much for that. I just want to follow up with his request to connect it with the Tuan Ho in LinkedIn. Actually, I think Tuan Ho is a very popular speaker. With the 100,000 followers on Facebook, on LinkedIn, something. So I think everyone you can follow him with a lot of informative status and informative information and news. Actually, the next question is. I think it's quite similar to the previous one. Will fintech push people out of workplace? And the second point is that what are new occupation in that area? I think you already addressed the second point. So maybe it's for the first one.
I can see that yes, it will push a lot of people out of position. One of the simple thing is insurance company now. Why do they need human broker if their platform already can play most of the role of a broker? So they don't really need a human broker anymore. They don't need offices, and if they don't need offices, they will take a lot of jobs out of people doing cleaning work and anything. So I can see the impact of the insurance very clearly is they will take people out of office. They don't really need a lot of people in office, and then so that will take a lot of jobs out. And then also in the banks as well. If some of you get into the banks of the UK right now, you will see a huge change in some of the banks now. They are just taking a laptop and running around. They no longer have an office anymore. And so that will reduce the amount of office, and then also eventually reduce the amount of people they need.
So risky, right? Okay, actually, the next question is relevant to the occupation as well. I think many people really care about the career in the field. And, the question is, which technicals that fintech company in the UK requirements? And the second statement is that what position in the UK companies or banks that fintech graduates can apply?
Well, as I said before, data analytics, data analyst, machine people who can be data engineer will be in huge demand at the moment. And also people who can do programming of new fintech products, obviously. So if you are in computer science, engineering, you can have a huge job over there. Bank is recruiting more engineer than banking people at the moment, some banks. And also people who are doing in the banking and finance now or accounting now, they have many of the new programs we have a traditional accounting and finance, for example, and then with the term with data science. So you can see that data science has become now a new term, business term. Buzzword is if people can say you can do data analytics, you are basically in demand right now. And so it's basically, I can immediately say data is a new job, and then people need that. So that is, so programming and all of them is require one thing is programming skill, whether you are in data, traditional accounting finance with data, or if you are moving into being an engineer, you still need to be able to do programming. And I think that's a skill in high demand.
Yeah. I think Hai, you have a question, isn't it? Maybe you first, yeah.
First of all, thank you so much, Dr. Tuan and Randy for particularly Dr. Tuan today for insightful discussion. Help me an audience with the best understanding on emerging theme in fintech. Particularly, I realize the point you mentioned about what we can contribute to the stream of literature, for instance, like insurance sector or digital payment, bank lending, etc. And I also somehow understand that the main challenge to us today is the availability and access to data, and we need to spend effort in data. I just have some open thought because today we have Dr. Tuan Ho and Vũ Trịnh, and as well as some other expert, for example, Tâm Nguyễn from the Tingham. I just have some open thought that to see whether we can deal with data accessibility. For instance, like the UK market, we have the financial system for corporate finance in general, where you maybe some of us have read literature, and whether any data vendor have us to approve with what, for instance, like we have those particular number listed firm in the UK market, for instance, and whether is there any data or online sort help us to classify so which companies they approve with fintech adoption, for instance. So, and yeah, just open thought, just not direct question, just open thought to say whether if particularly you and Randy now based in the UK, you maybe have more timely information than me from New Zealand or somewhere else. So that's just my open question. And because if we can approve or we can know the source for the data vendor that help us classify. For instance, we have 20 listed firm in a particularly sector, and if we have a data vendor can have a classify this firm or that firm, they have implement fintech adoption in their business. Could be digital payment, could be bank lending, etc. This would be very helpful. But that's just my open thought. We can have further discussion or brainstorming later.
Yeah, thank you. That's very helpful idea. I think we have some data vendors. They have data on. I understand that they have the data on startups company, and then in startup companies we may be able to identify whether they do fintech or not doing fintech on that side. Listed firm, we can look into their annual report to see whether they have some terms on that. The problem is we need the dictionary on finding what is the term for fintech. And I don't know exactly what is the best way of doing that. It could be like letting the AI to read a handful of textbook or thing on fintech and then trying to identify the keywords. The main thing problem of that is many of the fintech terminology is actually financial terminology, and so they can't really identify whether they are different. One of the thing is identify for more term like machine learning and other things into some of the annual report if they mention anything like that. Another narrower area is like if they say something about blockchain or cryptocurrency, that could be another thing to look into. So instead of trying to look into something like very specific, very big like fintech, we look into something more specific like machine learning, or we talk about AI, or we think about blockchain. So that could identify the companies with some investment into those or something related to those, and then can look into those. That could be interesting. And not necessarily we need to do that with the UK data, because the US data we already have many ways of reading the annual report. So now we just need to identify the key term. And I think there's something idea that can be done.
Yeah, that's a good point.
Yeah, thank you so much. I think that's a point that's really want to have open discussion with you, Randy, and people today. So that's the point. That's at the end my understanding. So that's why recently I reviewed some paper on fintech, blockchain, and particularly my research portfolio mainstream focus on climate finance. So the point is, and main challenge Dr. Tuan mentioned today is we still need to manually look at the annual report by company by the keyword. So that's the thing. So I think with Randy today and people, I think we can start with a small sample and to say not too big UK market, US market, but I think because I'm particularly interested in to see how fintech adoption can apply in insurance company for climate risk related factor for the thing we're doing research together today. So yeah, thanks for the information. Stay now your thanks.
Yeah, very interesting. Can link it like with climate finance and maybe fintech area, maybe in the future for research collaboration or something. Okay, so a lot of questions. I have to go quicker. Do you think DeFi will be the next step of fintech? Thank you. That is the question from audience.
Yeah, I think a lot of people has an interest for DeFi. I personally still think that for finance, we need somebody to be in charge, just in case when something bad happens. And DeFi, from my understanding, is in the end we have nobody in charge, or we have a lot of people in charge. So, well, I'm not really fond of an organization that is taking other people's money, and eventually nobody is in charge in the end of the system. So generally, I think that is also brought down to some of the idea that is we have the idea of people say, well, we have an organization that is basically everyone will have the same say on the blockchain, and then a corporate level decision. I don't think that is a great idea. Everything about system is when we have a group of many people and then everyone had the same say. Normally, that would not be a great decision from my perspective. So similarly, DeFi, well, it is there. There will be investment in there already, and then will be more. Personally, from my perspective, having DeFi is more like there's very risky from my perspective in investment. But people are still investing that, and then a lot of my friends have disagreement with me. So just personal opinion, I think DeFi is. If you think about, so there will be two levels of answer here. Is one of the thing is DeFi gonna attract a lot of money? I think so. In the next round, a lot of people still put money into there because there's growth opportunities. If you think that is a good model, I don't think so. Because I still favor that when money get into somebody's hand, then we need somebody to be in charge. And especially if you see with FTX happening, is if money is, even somebody is in charge, we still don't know where the money is. So DeFi is in many ways, it can get wrong in any time, and everyone will say, no, this is not my wrong thing. I'm just one node on the system, and everyone is just one node on the system. Nobody is in charge. So my feeling is like this.
Yeah. The next question is, how could we differentiate a traditional bank and a fintech bank in research? And with the note, like what factors should we be looking at?
Well, I think that is very interesting. That is also the question I have for the limitation, I think, with the accounting review paper. So how you identify a broker that is mainly used robo and the broker that is not using that at all. You can't. So you can only decide that this is a threshold. I decide that this is a more fintech approach and this is not fintech approach. And I think by the definition, you will need to allow a different definition of that, and you make sure that when you do the research, you do a lot of robustness tests on that. So let's say if I put on the threshold, so this guy is having a lot of keywords on fintech, and with some guy who having nearly zero, and with some guy who might actually be involved, but then not really showing there, would the result actually vary that much? And I think eventually we have to live with the fact that there will be no perfect research, and then we just need to do our best to say, well, we are very thoughtful about identify a company that is fintech or not, or a bank that's adopting fintech or not. But then the question with the bank adopting fintech or not, I think generally at the moment that would be very difficult to identify a bank that is substantially large that's not really adopting any fintech at the moment. So you will in the end have a group of banks that is basically big banks compared with a group of banks that is small bank, because small bank they have less resources to use fintech, and so that becomes a study about big bank comparing with small bank rather than a fintech. So you need to have something in a very different cutoff. So that is my perspective about this.
Yeah. So the next question, I think the next question may be related to the research findings or some survey, or I don't know. But actually, from macro perspective, are there any differences between the developed countries and developing countries when they start changing from the traditional banking system to the fintech?
Well, actually, in the paper I mentioned about in the financial regulatory of financial stability for 2020, they already discussed some of these. I am not aware of any empirical yet, but then from the FSB perspective, there will be a huge difference, because you have somebody who's already very developed, and then you are now adopting a technology into a developed framework. That is very clean set of things, and that is for sure will improve things. But then if we look into the result I have with the Vietnam, is basically when you have fintech in, that is basically negativity to the system kick in. So because you have a system that the investor or the user, they are not really loyal, they are basically adapt to new things very quickly. So when you have fintech kick in, and if they can take away any services, they will basically have negative impact on the current traditional financial institution immediately. So I think that is the main thing. But then that would be an interesting, again, if we can do a comparative studies across different countries, and then you basically will find some evidence on that. And I think that will be an interesting thing. And again, that is investment into identifying the fintech in different countries, cut-off point, and also the impact. But then I think that's also doable. It's just a matter of whether you want to invest in that, because you might not find what you want, and that's the major thing.
Yeah. I think we run out of time, but actually we have a few more questions to go. So maybe we can discuss these quicker. The first one is that with current situation of bonds not being able to be back in Vietnam, it can be said that the trust for traditional banks is hugely challenged. Do you think that would accelerate the decentralized financial institutions and services? Thank you so much.
Thank you for the question. My personal view is no, because if the traditional bank you cannot trust, how can you trust a decentralized financial institution? Because we are talking about trust here, and the people who buy bonds, many of them don't really know much about financial services. And now you want to try to explain to them what DeFi is, and then what is investment in DeFi is. This is becoming even more challenging. So my perspective is they can be attracted to DeFi simply because you have higher interest rate, much higher, and that's it. They can be attracted to that. And I cannot deny that if more money is put into DeFi, that is my main concern, because people don't really we have similar situation. People get into bonds because they have higher interest rate than the normal deposit. Just that. And then now we will have a similar concern is, well, basically, if you have DeFi that is paying people, we already see a huge amount of interest rate on DeFi many months ago. So people now, if it get popular, they don't understand what DeFi is. They just invest because, first of all, their friends tell them. Secondly, because it has higher interest. So it is possible that people will get attracted more. This is not because they really fundamentally think that is better trust. This is more about, first of all, higher interest rate. Second, some friends told them. That would be my response.
Yeah. So just follow up, like, could you kindly share how you qualify the bots before purchasing them?
Well, I think this is more about you need to be able to use it and see how it really helps you with your decision process or working process. So for example, I buy my bot, basically, first of all, you need to pay for it to trial, or you trial for free. And then I see that this has some impact on my work, and then I just buy it. Obviously, it depends on the cost. Some of the bot is marvelously really very efficient, but then we don't have the money to buy it. For example, the Alpha Sense is really costly, and they don't really work with individual. They only sell it to institution. And then I work with the funds in Australia, and they have the first of all institution. Secondly, they have the money to buy it. So not everyone can afford a bot like Alpha Sense right now. So basically, it is first of all also how selective they are. If they selective, they have a tools, they demo is good for you. That is a kind of bot you should buy to improve your life. And I can say that they improved my life a lot in many ways.
Yeah, we have many more questions actually, but I think I may be priority time for someone to raise the hand. Yeah, Camden, can you please share your questions?
Oh, hi.
Hi.
Hi, Dr. Tuan. I'm from Vietnam. One of your fans. I follow you on Facebook a lot, and I don't know, maybe you don't know who I am, but a few months ago, you helped me a lot with my project. You share a lot of good information, and now to get to see you face to face, I'm really thankful for that. For my old questions, what do you think about the potential of fintech in Vietnam? And do you think, in your opinion, you think it should be more on the government centric, or do you think the government should have like an open market for people to develop their own project with a bit of regulation? What do you think?
My personal opinion is I think Vietnam has a very good opportunities with fintech, and to put in a bigger perspective, Ho Chi Minh City is planning to be an international financial center, and then if we want to be anything diverse, to differentiate ourselves from Singapore, Malaysia, or something, we have to embrace fintech in some way. So that is the strategic point of view. But then, if we look into the current situation in the market, this is not really great. In the problem that we have bond runs, we have fund runs, and we have many things. And if you talk to people in Hanoi, then you have a lot of sense of people want to be stable, careful, and then so generally we have a demand or the aim to do better in fintech because we will need to have international financial center. But then on the other hand, we have situation that is so difficult right now with the credit crunch for the real estate, and we have bond run, fund run. And will make the landscape of the regulation is very difficult. And I think that is an unfortunate situation because just a few months ago, we have really great opportunities. But right now, I would say that priority of the government will go to trying to resolve the current problem, at least for the year ahead. And hopefully, if things settle down, we will also move on with the some of the idea Ho Chi Minh City has on international financial center. we might have an opportunity with the fintech. And I think this is a good chance for people trying to promote the idea of what fintech should look like or should be in Vietnam right now, because we prepare ourselves for the ideas for the next area. I think so.
Yeah, so basically what you're saying is that it's a potential, and maybe we will look into it in the future, but also we want to be stable and be secure, right? And we have to solve whatever problem we have currently in the financial market with the traditional market, traditional finance. Yeah, so it's like it's not going to be any time in the soon, like early time. It will be in the next years. You mean?
Yeah, if you look into the regulation schedule, nothing about fintech coming out. They are mostly only putting out some draft on the idea of the digital currency, and it has been put on hold for months now. And so it means that that is not the really priority for regulation landscape.
But do you think I mean, our people, our government would be more open for foreign fintech to come in, because they already have the team, they already have the system, have everything, right? It's just about regulation. Or do you think we're just gonna play safe and leave it there for now?
I think if somewhere get the foreign people involved, and if the foreign people, they are really reputable, that is a better choice for the government, because they have low risk of putting some license or something like that for those kind of company, rather than letting the domestic company to develop something, and then they will be very reluctant to issue a new regulation on that. Yeah.
All right. Thank you so much.
Thank you so much, Ken. Thank you so much for a very interesting question and communication with our speaker. Thank you so much for that. Yeah, I think we only have 10 more minutes to go. So I will go with Hannah first, and then all the question in the chat box. Yeah. Hannah, it's your turn now.
Hi, hello. Thanks a lot for the opportunity to ask questions. I'm Hannah, currently working in Singapore. Hi, hello. I have a questions regarding the mobile payment in Vietnam, actually. So there is a regulations whereby the mobile payment account in Vietnam has to be linked to a bank account. And that kind of, to me, solve the purpose of mobile payment, because in the first place, you actually want to target more of the unbanked populations, which is actually the case for most of the other countries, from what I understand. So if there's a case, what do you think would then be the use case of the mobile payments in Vietnam for the likes of Momo? Because from VN Live, they are saying that in the end, in Vietnam itself, banks would be the winner.
Yeah, that's an interesting question. I would say that you specifically say Momo. So I think the way around this is getting digital bank license, which the government is open on. So basically trying to get a digital bank license, and then you can also use the mobile banking through the digital bank. It means that this is exactly what Momo is trying to do. So it is basically Momo trying to obtain that kind of license, and with that license you can do it. And if Momo can be successfully do it, some of the other provider can do as well. So I am positive that some of these organizations, they will win 1 or 2 mobile banking license. The question is how many will be issued is a question. I don't really know, but then I know that, and also you need a lot of effort to actually lobby, and also lobby in a good way is trying to tell the regulator what is we are trying to do, and then hopefully some of them will get accepted. But then I don't think that many will get accepted. So eventually my prediction about the mobile banking is you will have traditional players, and you have one of a couple new players. And as you say, then traditional players will still be the winners, unfortunately in some way. But then if you think about traditional players, many of them don't really have the technology. So there is a scope for cooperation here. If somebody have the technology, but then they don't really have the license, why don't they cooperate for the traditional players, especially smaller players, to enter into the market?
I think regarding the technology wise, from what I understand, VN Life is actually helping most of the major banks in Vietnam to develop the mobile banking, and they have their own e-wallets as well. And from what I understand from some of my friends, they are pretty good in terms of developing in terms of technology and IT. From what I heard, the digital bank license in Vietnam, if anyone here can share, I'm not very sure, but I don't think they have any right now, and regulations regarding digital banking in Vietnam, I think it's almost like zero, which is different from the other ASEAN countries, which I'm also covering them. But I don't think in Vietnam there's any digital banking license currently. So which actually puzzled me a lot, because in the most recent round, Momo valuation was 2 billion. I think most people actually know about it, and I don't understand how can it come out with their valuations, which then the regulation is already out, whereby the account has to be linked to a bank account. And to me, if there's a case, then there is no use case for e-wallets. And I just don't really understand if you have any idea on whether there's any case studies anywhere else that there could be any use case at all if your e-wallet has to be linked to a bank account.
Yeah, I think that is exactly the point that I was discussing with somebody in Vietnam, well, in June, about fintech. So basically, like you say, you have no digital bank license, but then that is exactly how to address this issue. So if you want to have, if you want to take this situation away from the traditional bank, you have to have a digital bank license. That is, I think, the way that the regulator is looking into this. So if you want to go into having the wallet, the e-wallet use case, you have to get a digital bank license. And so this is a kind of like a chicken and egg situation. So you need to have a regulation on digital bank, but it does not need to be a law. It just needs to be the under law regulation. It means that you can go on circular and anything that allow a company to apply for a license under circular, which can be terminated anytime in 2 years or so. So this is considered to be a, I think, temporary situation, temporary solution to this situation. And it was discussed a lot recently, but then I have to admit, I don't see any schedule for regulation push up on that one. But then, as I say, it doesn't need to be a law. So we might actually have something coming up down the line. But then I would not see in 1 year time. I won't expect that much. So there will be a scale. But then I'm positive that, because I think a lot of people understand that this problem from people in the circle of central bank and others, it's just a matter of time when they decide when to put it out. And again, unfortunately, the situation of the traditional financial system now is not very stable. That would actually put a delay in all of these development, because nowadays, now people are more considered about stabilize the system rather than trying something new. Unfortunately, the bond run and fund run happen at the wrong time, and then all of this idea is put on hold, I think.
Right. Thanks a lot for your sharing, Mr. Tuan. Thank you.
Thank you.
Yeah, thanks a lot. Thanks a lot, Hannah, for great questions and great answers as well. I think, unfortunately, we have no time to go ahead with all the questions. So I have to, end up the section for today. Before we finish the section, I would like to say thank you so much, Dr. Tuan Ho, for your great times, great presentations, and great answer to our audience. And actually, we received like nearly 400 people join us today, but due to the maximum limit of 100 audience, so we only have a 100 slot for today. I'm sorry for that, but we will post the recorded section in the YouTube channel, and we will share it to everyone. And I hope Tuan would not mind if we share it on the YouTube channel for everyone to follow up the section, because I think that is really, really informative and interesting section for everyone to follow up, and maybe perhaps later on, everyone can watch it. And I think there's things on other audience have more question, but you can connect to